Welcome to MarketTamer.com. It is Thursday, August 20th. You're looking at a chart of Research in Motion, which was featured on our Watch the Pros list over the past 3-4 weeks. In fact, it was the featured trade, and it was a bull put spread trade which was entered by Mark. And I'd really like to go through the thought process of this trade from start to finish here, because it's a great example of entering a trade, seeing things go right, then seeing things go wrong, and trying to react, and exemplifying the thought process throughout. So let's start with the beginning. We enter the trade, everything's going great initially, then we start to see it stagnate here, then we see the stock go higher again. That's all great because the bull put spread trade optimizes bullish trends, stagnant trends, and uptrends. But then it started to go wrong, and this is where, when you're in a trade, you need to start thinking about what would you do, how are you feeling. It's really important to place yourself in the position. And so as we feature a trade at a time, we're giving you the opportunity to see one thought after another, one action after another. You're not blasted with 10,000 trades and unsure what to do. You're getting to see every single thought process of a professional trader, and this is exactly what Mark was doing here. He was looking at what would he do at this point in time. Well, the answer is absolutely nothing, and that's often the hardest thing to do. In fact, I'd really like you to step inside this trade right now. Think about what you would do at this point in time after you've had a big down day, and then think about what you would do after this down day and a gap down and another big down day. And in fact, we had 7 of the 8 days from the peak here were down days. But what happened? Well, never was the trigger point, the strike 70 level, breached. And this is really the key to having a good contingency exit plan and remaining disciplined throughout, that even though everything went wrong in this trade for about almost 2 trading weeks, that is about 8 trading days or so, right from the peak, where we could see that we weren't breaking to a new high here. We had the big down day, we continued down all the way beyond $10 drop, and yet no trigger point was signaled. And in fact, right around that time, we had a bounce back. The stock started to go back up. We've had a $5 cushion room right now. The stock is trading right around $75. The short put strike is still at 70, obviously. That's protected by a long put down at 65. So with a day to go to expiration, we're looking at this position to expire worthless. Everything's working out well. And I'd ask you to really step inside these trades as we start to post them. Not all of them will go well like this one has, and that's almost the better learning experience. But this is a really good learning experience also, because throughout the course of a trade, not every day will be a good day. And part of being a great trader is accepting that not all good days require action. And what I mean by that is, on a down day, for example, this big gap down right from the $77 area all the way to about the $73, $74 area. That was a big down day. That could have caused panic. It didn't. It's not necessary until a trigger point is reached. It's not necessary to take action. But when a trigger point is breached, that's when we take action. And in this case, everything worked out pretty well. So we won't count our chickens entirely until the options expire on expiration, but for now we've got tremendous cushion room with very little time for a big correction to occur. So barring something absolutely extraordinary or exceptional, we'll expect that this trade will work out quite well. Now let's move quickly on to the S&P 500. After yesterday's update, we noted that if the price action closed above the 5-day, we'd likely have a follow through today. That's exactly what's happening. So we're going right back up to test this resistance area, which is right around 1,010. Now, we did intraday go higher. Intraday we hit about 1,013 on the S&P 500. We've also closed slightly higher than that, about 1, 2, 3, 4, 5 trading days ago. And so this is important action here to see if we can actually continue higher. If you were looking at some of the analysts following cycles, you'll see that they've had targets somewhere around 1,100 on the S&P 500. We were expecting this level to act as resistance. It has so far. The market's finding it very difficult to get past this, but it's had a little bounce back, maybe gathered some energy to go higher. We're not going to predict that until it absolutely breaks through convincingly, which it has not done so far, but the trend has turned positive. With that, we'll wish you a wonderful day and look forward to seeing you at MarketTamer.com.